Let's turn now to Ethan Harris to talk more about the stronger than expected jobs report and the economy as a whole. He's the head of global economic research at Bank of America Merrill Lynch. Ethan, welcome back. Nice to see you tonight.
Thank you.
Let's start, first of all, with your reaction to the report and why you think basically these reports and the previous revisions mean the labor market is so strong.
Well, I agree with the other people who commented before me. I mean, this is a very strong report. If you take out the distortions due to the strike and the laying off of temporary census workers, it's like 185,000 or something like that gain. So it's a very strong gain. I think we need to put it in a broader context. It is true that the labor market's held up a lot better than expected. But if you look across the economy, you do see tremendous weakness in the manufacturing sector. You see it in business investment. And so while the job numbers look great and the service side of the economy, which produces most of the jobs, look great, the manufacturing side of the economy does not look so great. So it's still a mixed picture out there, even with this good data.
You make the point, as I look at my notes, that what's happening, you say, is that companies have responded to things like the trade war by cutting investment rather than jobs. Why do that?
Well, think about it from the corporate perspective. You have no idea where tariffs are going to be 2 years from now. And so if you're going to make a commitment to new investment, to buy new plant and equipment, that's something you can't give back. You know, you have to put that money in. So you're not going to do capital investment until you have some clarity around what your future cost structure is going to look like. On the other hand, you'll hire. If you have business and you have demand for your products, you need to produce products. So you will add workers. If it turns out the trade war is really bad and you need to lower the employment at one of your outlets, you do it. But you can't return a factory, whereas you can lay off a worker. So the factories and the investment side is much weaker than the labor side.
The New York Fed and the Atlanta Fed both downgraded their forecast of economic growth. Are you at all worried about economic growth overall in the economy, separate from labor?
Well, I mean, the economy's slowing down. I mean, away from this report, and the recent reports in general have been a little bit better on payrolls. There's a broad slowdown going on. We think the growth will slow to about 1.3% in the fourth quarter, down from 1.9% this quarter. So it's a little bit further weakening. I'm not worried about a recession or a deeper downturn as long as we do get a trade deal, because with the trade deal, that intense uncertainty in the business world will abate a bit, and the economy should start to stabilize and improve. We also have a Fed that's working really hard to support growth. So as long as the trade war is under control, growth should pick up early next year.
Ethan Harris with Bank of America Merrill Lynch. Ethan, thank you so much.
Thank you.